Exciting update. The Securities and Exchange Commission has officially given the green light to 10 spot Bitcoin ETFs. Despite initial confusion, it's confirmed. Gary Gensler, in an official statement, remains cautious about Bitcoin, explicitly stating they did not endorse it. After much anticipation, the spot Bitcoin ETFs are approved. Grayscale has also chimed in, and these groundbreaking products are set to hit the market as early as tomorrow. Get ready for a new chapter in the crypto world. In a noteworthy conclusion to his letter, Gensler underscores caution, emphasizing that approving these products doesn't equate to endorsing the underlying asset. He urges investors to stay vigilant amidst the numerous risks tied to Bitcoin and crypto-related products. Gensler anticipates the public's speculation on future approvals, but is quick to quash assumptions, stating that approval of one doesn't signal an affirmative stance on others. He specifically addresses the anticipation around Ether spot ETF approval later in the year, cautioning against premature predictions, especially given the recent events of the past. Adding another layer to the story, options trading is likely on the horizon for these approved products, introducing a new dimension. However, the drama surrounding the approval is noteworthy, especially with the unauthorized access to the SEC's official account. While it may be considered noise, in an industry striving for legitimacy and broader adoption, it doesn't present a favorable image. The incident where someone gained unauthorized access to the SEC's official account and posted about it adds a layer of confusion. In an industry aiming for legitimacy and wider acceptance, such events are certainly not ideal. The timing, coupled with the ongoing efforts for legitimacy, makes it an unfavorable development. Additionally, the back and forth between Elon Musk, who owns X, and the SEC contributes to the overall drama. The situation also includes the Elon Musk factor, as he is not a big supporter of the SEC, creating a back and forth dynamic. The lack of basic two-factor authentication on the SEC's account has been highlighted in the exchange. While the drama surrounding these events is significant, the bottom line is that the spot Bitcoin ETFs are approved. Breaking it down initially, there were 14 issuers in the running for approval, but as of now, 11 have been given the green light. Notably, global X ETFs are among those awaiting approval, with timing differences in their filings being a contributing factor. As for the recent events, the previously mentioned debacle was far from ideal. The confusion triggered fluctuations in Bitcoin prices, and the subsequent revelation that someone gained unauthorized access to the SEC's official account added to the chaos. Elon Musk's involvement, asserting that it was not their problem, and pointing out the lack of basic two-factor authentication on the SEC's part, intensified the situation. This incident is indeed a black eye for the SEC. The significant volatility in Bitcoin's price, resulting from a hacker posting false information on an official government account, underscores the SEC's concerns about market manipulation. The incident has the potential to impact the SEC's reputation, highlighting the challenges they face in ensuring the integrity of the financial markets. The approval of spot Bitcoin ETFs is expected to bring a sense of stability for investors, thanks to the officially sanctioned trading vehicles. SEC Chair Gensler emphasizes the importance of sponsors providing full, fair, and truthful disclosure for these Bitcoin ETPs, indicating a commitment to regulatory oversight. However, the approval doesn't automatically translate to a green light for Ethereum or other cryptocurrencies. It's a nuanced process, and each asset will be evaluated independently. Despite the approval, there's a recognition that Gensler is not universally seen as a friend to the industry. In a recent discussion, there was an acknowledgement that progress has been made in the US, even if not as swiftly as some in the industry would prefer. Looking ahead, trading of these approved products is set to begin pretty soon. As for expectations, the industry is keen to observe how these ETFs perform in the market. Despite the recent events and drama, the current market reaction seems relatively flat, with Bitcoin prices showing little movement. The focus now shifts to how these newly approved products will navigate the market and how investors will respond. Exchanges and issuers have been actively preparing behind the scenes for potential listings. The critical aspect to watch will be the first-day flows for each of these products, which, as discussed earlier, will play a significant role in determining their staying power in the market. Adding to this, it's essential to look beyond the immediate impact of retail assets flowing into these ETFs. The real significance lies in the increased accessibility for pension funds and 401(k) investors to gain exposure to Bitcoin. This approval streamlines the process, allowing investors to navigate through established platforms like Charles Schwab or Fidelity to easily access these exchange-traded products. It marks a pivotal moment in providing mainstream investment avenues for cryptocurrencies. The notion of taking a longer-term view means considering the implications of the approval of spot Bitcoin ETFs over an extended period, not just in the immediate aftermath. Instead of expecting an immediate surge of assets in the first few days, the focus shifts to how retail cash flows will steadily flow into the cryptocurrency asset class in the coming months and years. The opening of doors for mainstream investors, particularly through well-established investment platforms like Charles Schwab or Fidelity, indicates a fundamental shift in accessibility. This shift is not a one-time event, but an ongoing process that will likely evolve gradually. It aligns with the cautious stance expressed by issuers who have emphasized that the adoption of these products will be a journey rather than a sudden influx. In essence, the call for a longer-term perspective encourages stakeholders to recognize that the impact of these developments will unfold over time, shaping the landscape of cryptocurrency investments in a measured and sustained manner. The approval of the spot Bitcoin ETF marks a significant milestone, particularly considering that over a decade ago, Cameron and Tyler Winklevoss initiated the process by applying for the Winklevoss Bitcoin Trust in 2013. Up until this recent approval, the SEC consistently rejected all spot Bitcoin ETF requests, expressing concerns about potential market manipulation and fraud. The SEC's reevaluation became necessary following a legal development in August 2023, when Grayscale successfully challenged the SEC's denial of its application to convert the Grayscale Bitcoin Trust into a spot Bitcoin ETF. Now that the spot Bitcoin ETFs have gained approval, industry observers are eagerly anticipating the commencement of trading. Unlike the traditional process of opening an account with a crypto custodian, directly purchasing the cryptocurrency, and managing various storage options, the spot Bitcoin ETFs simplify the investment journey. Investors can now gain exposure to Bitcoin through their established brokerage accounts, eliminating the complexities associated with direct ownership and storage of the asset. This increased accessibility is expected to broaden the investor base for Bitcoin, fostering greater adoption in the financial landscape. Exciting, isn't it? What are your thoughts on this matter? Let us know in the comments below. Thanks for watching. Until next time.